All right, let's get this thing started, y'all. What's happening? What's happening? What's going on? What's going on, good people? How is everybody doing on this Friday? Welcome to Financially Lit Fridays, where I go live every single Friday, just giving y'all some game, teaching y'all about anything about finances. Today, I dropped a video on balance transfers, just talking about that. Somebody had a question about that, so I thought, why not put that up for Financial Lit Fridays? But what's going on, y'all? Welcome, welcome, welcome. As you come in, let me know where you from and if this is your first time on my live. Let me know where you from and if this is your first time on my live. Let's get this thing going, y'all. Let's get this thing going. What's up? What's up? What's up? Come on in and let's get it to 1,000 likes, y'all. Let's double tap. Michelle, what's going on? Long time. Well, it ain't really been a long time, but good to see you though. Good to see you. Double tap. Let's get it to 1,000 likes, y'all. Let's get it to 1,000 likes. What's happening, Dylan? What's going on? What's happening? So we got Charlotte in the building for the first time. What's up? We got Maryland in the building. As always, Maryland is always in the building. Y'all double tap. Let's get it to 1,000 likes. We have five. We have 5 right now. Let's get it to 1,000. Let's fill up the room, y'all. Let's fill it up. We got 2 people from Maryland. We got Patrice from Michigan. What's going on, Patrice? Rashawn or man, I'm sorry if I messed your name up. From Illinois. Frederick, what's up? What's up? Let's go. Let's go. Double tap, y'all. Let's get it to 1,000 likes. And then we're gonna start talking. Y'all let me know. Do y'all want me to? We got Brooklyn in the house. What's up, Brooklyn? Y'all want me to talk about credit cards and balance transfers? Or do y'all want me to go over this? I kind of want to talk about this. Because this video had a bunch of views this week when I dropped this video. Never do these things with your money. But y'all let me know. As you come in, let me know where you from. Let me know if this is your first time joining us. Welcome to Financial Lit Fridays, y'all. I do this every Friday. I go live around 8:30 p.m. Eastern. And we talk about financial literacy, financial education, and a bunch of other financial topics. All right, but let's see what y'all want to talk about. We can go over this list, or we can talk about the topic that I dropped today, which is balance transfers. What y'all want to talk about? Go over the list, please. I'm from what's MA? Is that Massachusetts or Maine? I don't even know. Running it up. What's up, Brad God? What's going on? You want me to go over the list? What's up? What's good? What's good? See hi alone. What's up? Massachusetts. Yes, yes. Maine is, what's Maine? What's Maine's letters? That's a shame. I don't know. That is a shame. What's going on, y'all? Make sure y'all, let's get it to 1,000 likes. We have 500 likes right now. Move your head. We're gonna go through the list, y'all. Every week y'all talk about move my head. I know my head is big, but we're gonna go through the list. We're gonna get through it. Go over the list. When I use debit cards, I build credit. Can you move over so I can screenshot? Go over the list. All right, so everybody want me to go over the list. All right, we're gonna go over the list for sure. For sure. Investing in crypto. As you should invest in crypto. Crypto is the way. All right, so look, I'm gonna give y'all a second. I'm gonna give y'all like 5 seconds to screenshot, and then we're gonna talk about the list. How about that? All right, if y'all cool with that, double tap the screen. Let's get it to 1,000 likes. Once we get to 1,000 likes, I'll move out the way, and then y'all can screenshot. Then we can talk about this list. All right, y'all let me know which one you want to go over first off of this list. Let me know which one you want to go over first off the list. Which one y'all want to go over first? I probably just got in one of y'all screenshots. But there it is right there. Boom. 5, 4, 3, 2, 1. All right, bet. Boom. We have 1.3 likes. Which one y'all want to talk about? Which one y'all want to dive in on first? Let's talk about it, y'all. Let's talk about it. All right, I see number 3. Appreciate the likes, y'all. Thank y'all for 1.3. Number 3, show off how much money you make. That's a good one. That's a good one. 1, 2. Go down the list. Number 2. I'm seeing a lot of 2s. 13. 7. All right, so let's just do this, y'all. Let's just go through the list. Let's just go through the list because I seen a bunch of numbers. I'm seeing mostly twos. So I'm gonna start at 2. I'm gonna start at 2, and then I'm gonna start from the top and go down. All right. So let's start at 2 since everybody wanted to talk about 2. All right. First things first, though. I talk about this every day. I drop nuggets, I drop gems inside of my group, which is called the Money Mindset League. If you want to be a part of that, you can join it. It's free. It's over 1,700 people inside the group. All you got to do is go to the link in my bio and then tap join the community. You can get involved with that. I'm also trying to grow my Instagram to over 10,000. So if you don't follow me on Instagram yet, make sure you follow me on Instagram. I'm going to start dropping like different content on Instagram, and TikTok is going to be kind of like the same type of deal. But my Instagram is going to be like for y'all. I'm going to ask y'all questions on Instagram. We're going to like really build that community on Instagram. I feel like Instagram is better for that more than TikTok. So y'all go follow me on Instagram and join the group. That's at the link in the bio. You can literally just tap my profile picture, tap on the link, and then do it all right here while we live. All right, so let's go over number 2. Let's go over number 2. A list of facts. Absolutely. So number 2 is save all your money at the bank. How many of y'all like have your parents, grandparents, like basically everybody told you number 2? Let me see something real quick. How many of y'all have always been told this? Save your money at the bank. Keep all your money at the bank. Once you start making money, start saving it at the bank. You need to save it at the bank. You need to put your money away. All that type of stuff. How many of y'all are in that boat? Let's see. Red Bull Dog says me. Tuning in says me. Shank says me. Benusita says me. Erica, what's up, Erica? So look, we've been taught this our whole lives to save all of our money at the bank, right? And honestly, I'm gonna be real, right? When you're young, it's not really necessarily bad advice. However, especially when you first get started, when you first trying to, understand how money works and, how to start making money and what to do with your money, the bank is a safe place to put your money, right? That is why they tell you that. That is why they want to, or every message that you've heard growing up, what's to save all your money at the bank, is because it's a safe place. It's insured. It's backed by, big time insurance where, if something was to happen, they'll be able to give you your money back at the bank. That is true, right? It's very safe. It's a place where you could, hold money hold large sums of money and you really don't want to lose it. It's a good place to hold it. However, big however, you should not save all of your money at the bank. That's why I included the word all. You don't want to leave every single dollar you have in the bank. Okay. Reason number one. Okay. It's only insured up to $250,000. All right. So if you ever plan on becoming a millionaire, you're having a bunch of money, anything over $250,000 and something happens, the economy crashes or anything like that, they're only liable for $250,000. Okay? That's number one. Number two, you not getting no kind of bang for your buck sitting in the bank. All right? You're not getting no kind of money with leaving your money at the bank. Banks right now are averaging 0.01%, right? Interest rates are like almost negative right now. That's how bad it is because of the economy, because of COVID, because of the war now. It's a whole bunch of stuff going on, right? Interest rates are super, super low. That means the bank is paying you almost 0% to hold your money. Like you're letting the bank borrow your money and they're not giving you anything back in return for that. Okay? So you do know when you put money into the bank is not just sitting there in reserves, just leaving a bunch of cash inside the bank. What they're doing is taking that money. They have to leave some, of course, inside the bank, but they take basically 90% of whatever you deposit into that account, and they go and do what we should be doing, with our money, which is investing it. Okay? So reason number 2, they're not paying you anything. They're not giving you no kind of return on your money. That's why you don't want to save all your money at the bank. Are taking out loans bad under 10K? It depends on what it is. It depends on the interest rate. It depends on the situation that you're going through. Okay, so it's a lot of factors that goes into that. I can't really answer that one. Okay, but saving all your money at the bank is a no-go. So instead, what we should be doing, I'm gonna give you the blueprint right now. I talk about this inside my ebook. If you don't have my ebook yet, please go get the ebook. My ebook breaks down step by step how to set up your financial foundation, how to become financially free, so that you know exactly what to do with your money. It's going to help you manage your money. It's going to help you save 5 figures, 10,000 plus, and it's going to also help you learn how to invest and what to do with your money. All right, so here's what you do. You only save a certain amount in the bank. What I like to do and what I do is I save about 6 to 12 months. Actually, I only save about 6 months of expenses at my bank. That is it. My bank is, the sole purpose of my bank is for my emergency fund. And even then, I don't even like to hold my emergency fund in a regular savings account or a regular bank, because like I said, the interest rates are so low. Even the high yield savings account. So I like to put my emergency fund in a high yield savings account where I can earn at least 0.5 to 1%, depending on what platform or what bank that you use. Okay, so you should only have about 6 to 12 months of expenses saved at the bank, period. Period. Okay, that's for emergencies. That's for money that you need in case there's another pandemic, in case you lose a job, anything happens, right? To help you transition from a 9-to-5 into your own business, a whole bunch of things. That's what you need liquidity for, basically. That's what emergency fund saving is for liquidity. It's to give you options. It's to help you become financially free so that instead of living check to check, you can have money saved up. You can be liquid to be able to make moves and make decisions that you normally wouldn't make if you live in paycheck to paycheck. That's what the savings or the emergency fund is going to allow you to do. Okay? So you should keep 6 to 12 months saved inside the bank. Everything else, though, everything else, y'all, like literally after 6 to 12 months saved, everything else should be invested into multiple things. It's number one, it should be invested into the stock market, right? Inside of a Roth IRA that you contribute to $500 a month. Try to max it out as much as possible. $6,000 per year if you under 50. That's what it should be. Okay. Inside your Roth IRA, number one. Number two, definitely crypto. Definitely want to invest into that. You don't like stock talk. I feel you. This is not really stock talk. It's just about investments, right? Invest in it. The match and max method, absolutely. The 401k and your Roth IRA, right? That's what you could do with it. Besides just sitting it in the bank, right? Sitting all your money in the bank. Because remember, like I said, you should have at least 6 months saved at the bank, and then everything else should be invested. So stocks, crypto, real estate. So save up for a house, right? That money can be put into a high yield savings account or something like that. Okay. What I said, real estate, your business. If you have a business, you can start a business with that money. Businesses have like the highest return, right? You can start a business for like $100 and make $100,000. It's crazy nowadays because of the power of the internet. Okay, invest into your business, right? Investing into yourself, personal development, health, fitness, those type of things that help you live longer, to help you make more money, to help you stick around and be with your family, so that you know there's no health problems or anything goes wrong, so that you're there for them. All right. What else can you invest in? You can invest in art, y'all. I don't talk about this a lot. I'm gonna start talking about it, but you can invest in art. There's a website called masterworks.io. You can invest in art, literally, and make 10 to 12% per year in art. It's crazy, y'all. Y'all gotta stick with me. Y'all gotta follow me if you don't already. I'm gonna give y'all the game on this, and make sure you follow or join our group so that you can get updates on this. You can be one of the first people to get updates on this. Okay, Masterworks. That's what it's called. Look it up. is how you can invest in art, like literal pictures, like famous artists. You can invest in their projects. They're like art grows anywhere between like 8 to 13% on average. Okay, that's about the same as the stock market. And what's great about art is it's not even correlated with the stock market, meaning that if the stock market goes down, art typically won't have that much of a drawdown, right? It may have a little bit of a drawdown, but it won't a lot. Why? Because mostly people with money invest into art, right? People with a lot of money invest in the art. So, because the stock market goes down, it doesn't really affect art that much. Okay. The next thing that you can put your money into is stable coins. Okay. Stable coins is a type of cryptocurrency that's pegged to a currency like the dollar. Okay. For example, USDC, that's the US dollar coin. That's something that you can put your money in to earn higher interest. There's platforms. I'm going to move to the side in a second, y'all, after I talk about this, so that y'all can get a screenshot for those that's just coming in. But stable coins, okay, this is something that's pegged to the US dollar, where you can earn up to, on Celsius, I believe like 8%, 10%. And remember, y'all, the stock market is giving you anywhere between 8 to 10% on average. The S&P 500 is giving you anywhere between 8 to 10% on average. For you to be able to save and put your money in something like stable coins where you can earn 8 to 10%, that's really good. Okay, that's really, really good. I don't think too many people understand just how good that is. And it's something that's pegged to the US dollar. So, it's not going to fluctuate. It's not volatile like Bitcoin and Ethereum. It's just something real simple. Okay, so those are some examples of some of the things that you can invest in besides like all the typical investments. Okay. Who regulates stable coins? So that's something that they're going through right now. They're trying to regulate it right now. So, but the whole thought of stable coins in that crypto market is for it to be like decentralized. That's the word that they use in the crypto space. Decentralized meaning that there's no government controlling it, right? There's no like one party controlling it. So that's the thought behind, crypto and stable coins. All right, so that's number 2. I'm gonna go through the rest of the list after I step to the side so y'all can screenshot, because y'all are yelling at me right now through the screen. I can hear y'all. So go ahead and take a screenshot. I'm gonna give you like 10 seconds. I got y'all. 5, 4, 3, 2, 1. All right, you're gonna have to wait till next time if you want to get that screenshot. All right, so let me go to number 1 real quick, because I can do that really quickly. Then we'll go through number 3. So use a debit card. You don't want to use a debit card, right? And there's some debit cards that are good. There's some debit cards that report to, credit bureaus and everything. But for the most part, your debit card is not going to give you any benefits that a credit card would. So the reason why you shouldn't use a debit card is because it doesn't give you the same benefits as using a credit card. When you use a credit card, you have no liability. Okay, I talk about using the bank's money versus using your money. Okay, if y'all learning something, double tap. Let's get it to 5,000 likes, y'all. We got 200 people in here. This is the most I've ever had on the live. I appreciate y'all so much. But double tap so we can get to 5,000 likes. Okay, the credit card you have zero liability. It's all on the bank. So, for example, I don't know how somebody got my credit card information, but they did. And it was a bunch of purchases, like $200, $500 purchases on my card. And, I'm just glad that I got the update so I could catch it in time. But they ran up like $3,000 on my card, like right at like midnight or something, like guessing like they thought I was asleep. But they ran up like $3,000 on my card. So if they would have did that on my debit card, that would have been on me. It would have been like dragging an arm and my leg trying to get my money back. But since that was my credit card, since I only used my credit card, right, I was able to call and get that problem fixed. They was able to send me a new card, and I didn't have to pay $3,000. I didn't even have to pay the rest of my balance that I had for the rest of that month. I was just saying like, yo, they got my card. I just need a whole new card. I need to reset my whole balance because I don't want them to be using my card and charging it up and all that type of stuff. So they used up $3,000. I called. I got that problem fixed. It was zero liability on me. The bank was able to handle it. They sent me a new card and they canceled all those purchases. I didn't have to do nothing but make one call. That's all I had to do. So that's for example for number one, zero liability and fraud protection. Okay. Number two, cash back and rewards. Okay. This is like a trending topic right now with credit cards, with the cash back and rewards, being able to get free gifts, being able to get free flights, being able to sit in, the airport lounges, being able to get, free hotels, rentals, and all that from the rewards from a credit card. Now, I'm going to be doing a video on this. Like basically just dropping like my favorite cards. I did a video on this before, but I didn't do my favorite cards. I just kind of did like the best cards out. So I'm going to do a video on that. So don't ask me which cards right now. All I can tell you is Chase Freedom is good. Capital One has a good card and Discover has a good card. But I would do a video on this for those that want a video on that. All right. So yeah, cash back and rewards. So I did a video on cash back where basically if you use a card, you use $2,000 on a card, and you use it on the credit card, and let's say you got 2% cash back on all your purchases, that's about $40 per month, which translates to about $480 a year. Okay, that's extra. That's like free money. That's money that you could put towards savings. That's money that you could put towards Christmas gifts. That's money that you could use on a free flight, right? If you did not use that credit card, you were not going to get that cash back. You were not going to get those rewards for using your credit card on your regular everyday expenses every single month. Okay, I just want to make sure that that's clear. So that's the second reason. Number three, and I'm gonna move out the way after I get through these, y'all. Y'all just gotta be patient with me. All right. I don't want to keep moving out the way and trying to talk at the same time. All right, but I got y'all. I'm gonna move out the way. I'm gonna give y'all 10 seconds. All right. So number one was liability, right? Fraud protection. Number two is cash back and rewards. And number three is you can build your credit score. So your debit card is not going to, in most cases, let you build your credit score. It's not going to let you build your credit score, okay? When you use a credit card the correct way, which I talk about all the time, the correct way is using it to pay for your everyday expenses, not emergencies, all right, which is number 6, right? Using it to pay for your everyday expenses, not emergencies, and you pay it off every single month. That's going to help you in the two highest categories when it comes to your credit. Okay. How many people in the comments know the two heaviest weighted categories when it comes to your credit profile? Drop them in the comments if you know it. Drop them in the comments if you know the two heaviest weighted. Hey, just stopped in to say go blue. Yes, go blue hands. Go blue hands. All right, cool. So I see some people saying it. So the two most important is your payment history and your credit utilization. Your payment history and your credit utilization. Payment history and utilization. Those two make up 65% of your credit profile. So by using your credit card correctly and by simply just spending on everyday expenses and things that you spend on anyways, right? And paying it off every single month in full, or at least below 3% utilization rate, and on time, you're taking care of the two heaviest weighted parts of your credit profile, which is more than 30%. Nah, you want to use less than 30%. You want to use like 10% or less, actually, of your credit utilization. Okay? So the two most important, the two heaviest weighted factors when it comes to your credit profile, which is your payment history and credit utilization. All right? And when you do that, your score is going to increase. That's just the nature of the beast. That's just what's going to happen automatically, right? When I started doing this like 2.5, almost 3 years ago, right? My score was like in the 5, the 560s, right? By just doing this alone, it jumped almost 200 points in like a year. So, and I had collections on my report, and I had late payments on my report. And it's like just simply doing the first two, y'all. Just simply doing paying on time, and keeping my credit utilization low, right? I was able to raise my credit score almost 200 points in like a year. And I had collections on my report that I paid off like as a dummy. I shouldn't have paid it off because that's going to be on my credit profile for another like 3 years or so. And then, you know, keeping my credit utilization low, that boosted my credit score. Okay? So that's why you don't want to use a debit card. Never use a debit card. Okay? But I will say this though. I will say this, and I'm gonna move out the way after this, so that y'all can screenshot before y'all get mad. Okay? All right? I will say this though. If you are not disciplined, then you might as well just stick to the debit card. If you are not disciplined, you might as well just stick to the debit card. All right? I'm going to say that. I'm going to say that much. Okay? But if you are disciplined and you can do what you already do, which is pay for your everyday expenses every single month, except not use the debit card and exchange the debit card with a credit card, then you can benefit greatly from this. Okay? Last year, I was able to pay for my mama a gift, like everybody a gift last year, just by simply just using my credit card and using the rewards points, right? I had some coaching, like I coach football, so I needed to buy some pants and a shirt and a bunch of other stuff. I used my points. That didn't come out my pocket, right? I used my points. Okay, I'm gonna do a video on the cards, but let me get out the way so y'all can screenshot. All right, here we go. I'm gonna give y'all 10 seconds. I'm gonna give y'all 10 seconds. 5, 4, 3, 2, 1. Hey, thank y'all for following me so much. I appreciate that, y'all. We already reached my goal. We had 10,000 likes. That's crazy. This is the most I've ever had on the live. I thank y'all so much. Appreciate y'all. But somebody asked me about my favorite cards. I'm gonna do a video on this, but Chase Freedom. There's an Amazon card if you use Amazon. There's Discover, and there's Capital One that I like. Capital One Quicksilver that I like. Okay, there's a bunch of them. But the thing about the credit cards is, what's good for me may not be good for you. All right, there's different benefits and there's different like cashback cards. So some cards are great for groceries. Some cards are great for gas. Some cards are great for travel. Some cards are great for retail or online shopping. Right, you just got to pick the one that's best for you. If you do most of your shopping on Amazon, there's an Amazon card that's going to give you like 5 to 6% per purchase on Amazon. So if that's you, you might want to get an Amazon card. You might not want to get the Chase Freedom. Okay. Do you think it's a good idea to match your employer's contribution to your Roth IRA? Yeah, so there's a method called the match and max method. Okay, you should always match your company's contributions to your Roth IRA. To your 401k, only if they match. And then you should max out your Roth IRA. So match your 401k and max out your Roth IRA. That's the rule of thumb that I follow. All right, for anybody that has a job with a 401k that matches. Okay, let's get to number 3. The easiest cards to get are the secured cards. So if you don't have a credit profile or bad credit, then just getting a secured card and starting there is the best way to go. What you could do is get the secured card, use that for 6 months, get another one, or increase your limit, do that again for another 6 months, and then apply for a regular, unsecured credit card, and then start building it up that way. It's a process, y'all. It's not going to happen overnight. You're not going to get approved for whatever your monthly expenses are right off the rip. It don't happen like that. You got to build up to it. I always say take 6 to 12 months to really create the discipline of using the credit card before you actually, dig deep into it and start using the method that I talk about, which is the swipe stripe method. All right. So let's get to number 3. Let's get to number 3, y'all. Double tap. Let's get to 15,000 likes. Let's get to 15,000 likes. Yeah, that's really... Thank y'all for helping each other in the chat, too. I'm missing so many questions. And for y'all to be able to help each other, that's amazing. Average secured credit card, my credit increased from 300 to 1,000. Wow. Thank y'all for following me. All right, so let's get to 3. Show how much money you... Show off, okay? The keyword is show off. The 2 keywords are show off how much money you have. Okay? I don't know, it's me. I'm all about being humble. I'm never trying to flex. Like, somebody came in my comments one day saying that I was flexing when I dropped this this list. Ain't nobody flexing, man. The reason that I created this list is... Go Blue Hands. The reason I created this list is so that we, our community, the black community, most importantly, can start questioning the things that we've been taught our whole life. All right? We get so used to things, and we learn from, the old way of doing it. The world has changed so much that we don't even question what we've been taught. My main goal with this was to help you rethink what you've been taught, so that you can unlearn some of the, the bad habits, and hopefully relearn some new ones, some good ones, so that you can start building wealth, so that you can be more financially savvy, so that you can be more financially literate, so that you can do more with the money that you do make, right? Because not everybody wants to make $1 million. Not everybody some people just want to live a comfortable life, but be able to manage their money the right way so that they can do that, right? That's the reason why I created this list. That's the reason why I put it out, so that we can start thinking, right? My job as a coach is to give you guidance so that you can think your way to the right answer, right? To what's best for you, right? Everything that I put out is just so that you can think, like open your mind to a new possibility, to something new versus what you've been taught. Because majority of the time, what we've been taught, myself included, does not work anymore, or we need to unlearn so that we can start doing some new things when it comes to our money. Okay, so that's why I created this list. But you don't want to show off your money. That's just me. This is something personal, right? I'm humble. I come from humble beginnings. I'm not the type to show off no money. I'm not the type to flex. That's what I was saying. Somebody came on my comments saying that I was flexing. Nah, I'm that's not even my nature. If you know me, if you know the type of person that I am, if you know me, you know that's not me. I'm humble. I'm just here to just provide information and help y'all think, right? Think outside the box. All right, think a different way versus what we've been taught. Okay, so you should never show off how much money you have. I think that's just that don't look good on you. That's just projecting, right? All the insecurities that you have. Right? That's how I feel when people show off money. That's how I feel when people hold up bricks of cash to their ear. That's just showing insecurities. That's just showing people that you got a little bit of money right now, but like what's underneath that, right? What's really the problem? What's really the issue? Because it's something deeper. If you got to show off your money, that's not cool to me. That's not fly. That's not, you know what I mean? That's just me. I don't think anybody should ever show off how much money they have. Now, you can there's a difference between showing off how much money you have and, showing people, how to make a certain amount of money, if that makes sense. Am I making sense, y'all? There's a difference between showing off how much money you have and showing people how to make a certain amount of money, right? Without flexing, without having to show off. Am I making sense? Cynthia says, yeah. Everybody y'all want me to move like every 3 minutes. It's crazy. It's new people coming in though. I feel you. So yeah, that's the main thing for number 3. That's the main thing for number 3. Y'all go ahead and screenshot. The young cats don't feel me. They probably don't, but hey, I'm trying to reach as many young people as possible because that's really where it counts, right? When you're young, that's when you have the most time. That's when you have the biggest advantage, right? When you're young, when you're able to to start young and able to start doing some of these things at a young age, it's only going to benefit you in the future. So number 4, spend more than you make. This is an easy one. This is an easy one. Most people understand this. It's hard for a lot of people. Most definitely. It's hard for a lot of people, but this is common sense, right? You don't want to go in debt. You don't want to spend more than what you make. You don't want to do that. That's bad news. That means you have bad money habits. And that's not what I want to happen. That's not what I want for you. I don't want you to continue living like that. Living like that, right, means that if any little emergency, any minor thing was to pop up, right, you basically in the hole. You got to climb yourself out of it every single time. Every single time an emergency pops up, every time something happens, every time you get a flat tire, every time something happens to your car that you got to get done, it's like you in a hole and you got to dig yourself back out because you spending all your money, right? And, that kind of ties to number 3. You showing off how much money you have, right? You spending all of your money trying to flex, trying to show off for people that don't really even care, right? That if anything was to happen, any small, it could be something minor, it takes you all the way off. And then you fall off and people never hear about you ever again. Okay? So, don't spend more than you make. That's a pretty simple one. All right, let's keep it moving, y'all. Stop keeping track of your expenses. My bad. Stop keeping track of your finances. This is number 5. So you never want to stop this. Now, do you have to do this constantly? Do you have to track your finances constantly? No. All right, I'm gonna be real. Because most people aren't going to do that anyway. All right, let me see. How many of y'all track your finances like consistently? Yes or no? Put a yes or no in the comments. Put a yes or no in the comments if you track your finances consistently. Let me see something. On payday. On payday, everybody check their finances on payday for sure. Yes, no, no, yes. Okay. So that's good. So I see a lot of yeses. All right. And I also see a lot of no's. But you don't want to stop keeping track of your finances. It's a bunch of reasons why, but basically what you want to have is so much control over your money. So much control over your money that it creates financial peace and financial wellness for yourself, right? When you have control and you basically understand your finances, you understand how much money is coming in, how much money is going out. What that's doing is it's relieving stress. Okay, one of the main causes of death is stress, right? One of the main causes of stress is financial worry, simply because people do not keep track of their finances or live below their means. So if you're able to keep track of your finances, and you don't have to do it every single day, you don't have to write out a budget every single time you get paid, right? You don't have to do that. But if you do something as simple as, I talk about this all the time, the 60-10-30 plan, which is basically a way to allocate your money, the money that you make, so that it's systemized, it's automated, and you keep track of it better by putting your money in certain allocations. So in the 60-10-30 plan, 60% goes to your needs, your necessities, the things that you have to buy to keep the lights on, to stay in your house, right, to get to work. Those are needs. Then 10% goes to wants. So, that's anything that you want, a trip, a vacation, shoes, whatever the case may be, a video game, whatever that is. And then 30% goes to saving and investing. Remember, keep 6 months of expenses in your savings account or in a high yield savings account. And then everything else should be invested. So if you do something as simple as that, what that's going to do, like I said, is just going to give you awareness. It's going to help you understand your money and where it's going. Every single month that 60% of your money is for this. 10% I could do whatever I want with. 30% is saved and invested for my future, or for, a house that I want in the future, or for a big purchase or anything like that. The more that you keep track of your finances, the less stress that you will have, and the better off with money that you will be in the long run. All right, so that's number 5. Never stop keeping track of your finances, y'all. Never stop keeping track of your finances. Double tap. Let's get this thing to like 25,000 likes. We had 19,000. Let's get it to 25,000 likes, y'all. I believe we could do it. We got like 600 people in here. This is crazy. This is crazy. I appreciate every single one of y'all. Make sure you follow me. Make sure you follow me on Instagram too. I'm trying to get to 10,000 on Instagram. Subscribe to my YouTube. Thanks each and every one of y'all for sharing. I really appreciate y'all so much. Like 100%. And make sure you join our group. I do have a group called the Money Mindset League. We have over 1,700 people. We just had a class, or not a class. It was more like a chat, a live, like kind of like if y'all know anything about ClubHouse. We had like a chat talking about how to pay off your mortgage faster yesterday, which was really good. A bunch of people learned a lot of stuff. So we do a lot of good things inside of our group. If you want to stay in the loop with me, like regardless of what happens on social media, like because TikTok can go away tomorrow, Instagram can go away tomorrow, all that stuff can go away tomorrow. If you want to stay in the loop, make sure you join our community at the link in the bio, y'all. I appreciate y'all so much. You disagree with number 2, that's fine. You know, you ain't got to do everything that I do. You ain't got to believe what I believe, right? You your own person. You have your own mind. All right, but I just talk about what I believe, and like I said, I put this stuff up there to help you rethink, right? To think of the old ways that we've been thinking, or the ways that we've been taught, so that we can unlearn some old stuff and start learning the new things. Okay, number 6, use your credit card for emergencies. Let's get into that. Let's get into that. So I like using your credit card for emergencies is like the last resort. Like that's like if you got nothing else to your name. And I understand. My bad, y'all. I'm trying to get my computer back up. But I understand, but you should not be using your credit card for emergencies. Like I said earlier, it should be used for your everyday expenses only. Okay? Because what you don't want to happen is what happens when you use your credit card for emergencies. You're not able to pay it back in time. You have to pay interest, and you get into that never ending cycle of paying debt, right? And then the debt increases while you pay the minimum on that, and you never ever get out of it. Okay? So that's what you don't want to do. You don't want to pay for any emergencies on your credit card. That's why the emergency fund is so crucial. That is why you need to have 6 to 12 months of expenses saved at the bank, so that you can take care of those emergencies when they pop up. So that when an emergency happens, it's not do or die for you. It's just a small inconvenience that you can handle, and then build your emergency savings back up. All right, let's get to 25,000 likes, y'all. Appreciate y'all. Number 7, be a co-signer. Okay, I've like just this year alone. My bad, y'all. So many people have got caught up with being a co-signer. Okay, do I have to explain number 7? Because I feel like enough people have been hurt by this to know this. Okay, but let me explain it very quickly, y'all. A co-signer, basically when you co-sign on like a house, a car, really anything that involves debt. That's basically saying that if this person is not able to pay, then you're on the hook, right? You are the next person in line that they go to looking for a payment. You definitely don't ever want to do that. And it's sad because in most cases, people are co-signers for their family members, and their very own family members, their very own blood, be the ones that let them down and leave them on the hook to deal with that debt. And it's saddening. It's sick. It's crazy. Every time I get on the phone and talk to somebody, at least 1 out of every 4 people have this issue, and it's a no-go. You can't. I don't care who they are to you. If they're your husband, your wife, your best friend, your sister, your brother, right? You cannot be a co-signer unless you just got it like that, unless you're able to actually pay it off and you don't really care. Don't let that happen, because that's going to affect your credit. That's going to affect your credit worthiness. That's going to draw down your credit score. There's a whole bunch of negatives and not a lot of positives when it comes to being a cosigner. All right, they'll take money from you. They'll have a lien on you to send it to collect. It's a whole bunch of things that you don't want by being a cosigner, and then the original person on the lease or whatever doesn't pay. It's over for you. It's over for you. All right, buy cars brand new. So screenshot real quick before I go on to the next one. Y'all double tap. Let's get it to 30,000 likes, y'all. Appreciate y'all. Let's get it to 30,000 likes. Go ahead and screenshot. I see everybody saying move. Go ahead. 5, 4, 3, 2, 1. All right, cool. So number 8, buying cars brand new. I feel like this is one that we've all heard before, but it goes back to wanting to flex. Okay, so instead of buying cars brand new, you can lease, just lease, right? Lease the car. Because at least when you lease the car, all the liability is not on you. So when you go to return the car, it's on the dealership, it's on the company, for any depreciating value of that car, right? For any, accidents, any problems with that car, it's not on you, it's on the company with that lease. So if you're gonna get something brand new, lease it. Okay, at the very least, lease it, but do not finance a brand new car. Do not put up $500 per month. That's the average for a brand new car. Actually, it's like $500. It's close to like $600 actually to finance a 5-year loan on a brand new car. Do not do that to yourself. Okay, that's money that's literally going down the drain. Like, you're not getting anything for that. The value of that car is going to drop as soon as you drive it off the lot, and you never ever going to get that back. I don't care what you do, unless you pay it off in full, unless you got it like that. But even then, I wouldn't buy a brand new car, right? I would rather buy a used car, like newer car, than a brand new one any day of the week, right? Because to me, in my mind, I'm not trying to show off. I'm not trying to flex. I'm not trying to have the best looking car. Right, it can be a nice car, right? It can get me from point A to point B, right? It can get me to point A to point B, but I'm not trying to look the flyest in the car. I'm trying to be the flyest in my pocket. I'm trying to be the flyest in my wallet, in my bank account, in my Roth IRA, in my investment accounts, right? That's where I'm trying to have my money at. I'm not trying to put it into a car that's going to depreciate. Okay, now if you have a business of like renting out cars and things of that nature, that's totally different, right? That's totally different. So you can get a car, you can rent it out on Turo and all these other apps and platforms and things of that nature and do your thing. But buying new, financing new is never a good look. It's you just put money down the drain. All right, so let's get to number 9. This is a big one though. A lot of people like to argue over this one. Number 9, buy your first home as a place to live. Buy your first home as a place to live. Okay? Who here bought their first home as a place to live? Who here bought your first home as a place to live? Me, unfortunately, still renting. Been thinking about it. Me, that's what I expect to do. Yeah. Still renting. Please explain. I got you. So here's the thing. Here's the thing. It's nothing wrong with buying a home, y'all. Okay. It's nothing wrong with buying a home to live in. There's just better options. Okay. And it really depends on you. Like, again, when I talk about this stuff, you don't have to follow it. It's not like set in stone. because everybody's personal finances are different. That's why they call it personal finances. So it's really up to you, your situation, and how you think. But like I said, I like to put this stuff out there to help you rethink. So the reason I said do not buy your first home as a place to live in is because your first home to live in, most people think of it as an investment or as an asset. But your first home, if you're buying it to stay in as your first home, as your property, then it really becomes a liability for 30 years. Okay? Yes, you get equity at the end of the 30 years, but during those 30 years, you have to pay for any damage, roof, heater, driveway, a whole bunch of stuff, right? Fixing up the house, leaks, anything. You're responsible for that. And that goes on for forever, even after the 30-year mortgage. Okay? So it's the reason I said your first home as a place to live is because it really is not an asset. It's not an investment. Even in most cases, even if you until you sell it, really, because you have to keep putting into it and keep, rebuilding the house and adding stuff to it, a whole bunch of things, right? Maintenance of the home, all that stuff. Rather, or on the other hand, had you bought, something like an investment property, like a duplex or a triplex or something like that, where you live in it for a year, live in one of the homes of the triplex or the duplex, rent out the other 2 or 3, and make income from that. Then you basically doing what's called house hacking, or using the rent from the other tenants to pay that mortgage. That's an asset, because that money is now, you're not spending any money to live there. You're living for free. And depending on how much you charge the other tenants, right, you can also be making some extra income that can turn into something substantial, right? Even if it's only like $200 a month, of course you got to save some for any damages or something that goes to the house. If you put $100 a month to the side for 30 years, that could turn into over $500,000 if you invest into the S&P 500, okay, and you earn at least 10%. So I just want you to start thinking of different ways that you can do things. And obviously, if you have a home already, there's probably a loophole. I'll have to look into it, but there's probably a loophole to where you can still do a FHA loan or something like that to be able to get access to stuff like that. But, even if you already bought a home, maybe you can start thinking of ways that you can start house hacking. Maybe rent out a room, or, charge your kids that grow up, for a room or something like that. Just to start turning that liability into an asset. Does that make sense? Does that make sense, y'all? I stopped investing in the stock market after figuring out real estate. Yeah, real estate is cool. Real estate is cool. All right, so go ahead and screenshot. The next one is a good one, though. Let people borrow money from you. Let people borrow money from you. That's a good one. That's a good one. Have you ever let anybody borrow money? Me, I have. Who's ever let somebody borrow money from them? Borrow, quote unquote, borrow money. All right. Yes. Still waiting for it. That was my next question. How many of y'all have gotten it back? How many of y'all have gotten that borrowed money back? No return. No return. No return to sender. That's crazy. They never pay back. Nope. Right. So that's the unfortunate event that happens every time you let somebody borrow money, right? No matter who it is. Okay. On TikTok is like, or not TikTok. One of them sounds is let me borrow $20 till tomorrow. Right? Y'all ever heard that sound? Y'all ever heard that sound? Let me borrow $20 till tomorrow. And then somebody did something, put up a post saying, well, if you need it till tomorrow, you might as well just wait till tomorrow. Right? So because when you let people borrow money, right, 9 times out of 10 you're not getting that money back. So you might as well not even borrow it. If you're gonna give somebody money, let them borrow it. If you're gonna give somebody money, you might as well just give it to them. Don't even expect anything back. If they do give it back, it's a blessing, right? But don't let people borrow money. You know, there's been a lot of situations. I'm sure maybe some of you have been in this situation where, you know, friends turn into enemies, right? People don't even speak to each other because they owe each other money. A whole bunch of things, a whole bunch of situations, right? And you don't want that to happen. So instead of letting people borrow money, right, like I do now, I'm gonna show you how you can make some money. I'm gonna show you what to do with your money, but you're not gonna borrow money from me. I'm gonna show you what you should do so that you can have more money and be more prepared whenever a situation like this happens again. I can show you how to do that, but I'm not gonna let you borrow money unless, you know, I'm just being generous and I want to give you money, right? So don't let people borrow money. Point blank, period. Let's get to the next one, y'all. What time is it? 9:27. We've been on here for about an hour. I'm gonna get through the rest of these. Keep your emergency fund in savings. That's the next one. Keep your emergency fund in savings. All right, I hope y'all got the screenshot. So keep your emergency fund in savings. So this goes back to number 2, save all your money at the bank. It's okay to keep your emergency fund in savings, okay? But what I meant by that is your emergency fund should not be in your regular savings account. It should not be in your regular bank account, okay? So most of us have multiple bank accounts. We have one that we have direct access to, that we can go to an ATM and pull money out directly, right? And then we have another account that, you know, is for whatever, for bills or for direct deposits or for savings or for anything. The main reason why your emergency fund should not be in your savings, in your regular savings account, is because you don't want to have, you know, direct access to that. When most people see that they have money, they think that, okay, I have money, I can spend, I can do whatever I want to do. And then they dip into the emergency savings when they shouldn't, when it's not an emergency, when it's not a major expense or anything that goes on. And, you know, they start taking money from that, and then that goes on for an extended amount of time. And then next thing you know, they don't have an emergency fund no more, or the emergency fund is down to like 1 month or 2 months. Okay. That's what you don't want to happen. So I'm all about, you know, eliminating the chances of you spending money that you need, right? And getting those chances or getting those opportunities and removing them from you so that you can keep that money, if that makes sense. I'm all about putting systems in place so that it prevents you from having bad money habits. That's all I'm trying to say. So keeping your emergency fund separate from your regular savings account, keeping your emergency fund separate from your regular bank account is going to prevent you from spending the emergency savings so that you have it when you need it. Okay? It's going to prevent you from spending that emergency fund money so that you have it when you need it. That's the only thing. I highly recommend that you put your emergency fund into a high yield savings account. I'm gonna move over. You don't got to keep saying that. I'm gonna move over after I get done with this step, after I get done with this number. Okay? All right. So, your emergency savings should be in a high yield savings account, okay? Separate from your bank account where you do not have direct access to it. So there's a bunch, all right? So basically your high yield savings account, there's some key attributes that you want of a high yield savings account. Because there's not really like a best or a worst savings account right now, because all of them are pretty low. All of them are about like 0.5%. But what you want to make sure that you have, or the features that you have, is number one, you don't, it has like very low minimums. Okay? It has no fees. No fees, no overdraft, no none of that, right? You want to make sure that it pays interest. A higher interest than the bank, most importantly. So those are the three things that you want to make sure that you have with your high yield savings account. Now, most of them offer that. Most of them are going to do that. But you just want to make sure that you read up on like what's the minimums, how much do I have to have in the account at all times, because that's a major factor when it comes to the high yield savings account. If you don't have a certain threshold, a certain amount of money in those high yield savings account, you don't get that high yield. Okay, for example, if one of the high yield savings accounts that I had, I needed to have 10,000 minimum in that account, or I don't get the it was like 2% at that time. This was before COVID, right? It was like 2%. If I don't have at least 10,000 in that account, then I don't get my 2% yield on that account. So you just want to make sure that you check that and make sure that when you use that account, that you're able to keep that money in it so that you can get all the benefits and the features. Okay. Which bank? So, look at Ally. Look at Ally or Ally. I don't know how you say it. ALLY. The Ally Bank savings account. American Express has a savings account. Goldman Sachs, Marcus by Goldman Sachs has a savings account. I was using UFB Direct at one point. CIT Bank is another good one. There's a bunch of them. If you Google high yield savings accounts, the best high yield savings accounts, it's going to be a bunch that pops up. Right now, it's about 0.5%. I believe SoFi is doing 1%. And depending on your platform that you invest with, your investment account may give you like 1% if you put it in their savings account. So you just have to search around. You got to do your research. If you join the group, I'll show you how to do research and all that, how to find this stuff, how to look it up. So let's get to the next one. Go ahead and take a screenshot. This next one is big. Axos is good. That's UFB Direct. They're through Axos. So 12. My group is not on ClubHouse. It's on Discord. It's a community platform. So inside the group, there's like different channels where we talk about different things. We have savings challenges going on. I have a financial literacy channel. I have a whole bunch of stuff. Every day I try to drop some knowledge. I try to drop some gems. And then once a week, we have a voice chat where, I hop on. I talk about the stock market. I talk about investing. I talk about crypto. I talk about saving money. I talk about a whole bunch of different things. What's going on. I talk about inflation. A whole bunch of stuff, right? But only for the members. So yes, it's free. It's free. So if you tap the link in the bio and join our community, it's free. All right. Make sure you follow me on Instagram too. I'm trying to get to 10,000 followers on Instagram. Subscribe on my YouTube. I'm gonna start posting more YouTube videos. It's up, y'all. We up. So number 12, manually save and invest. This is a big one. Like, this is one of my core principles as a coach, as a money coach. Okay. Because I believe in systems. I believe in automation. I believe in taking out the emotion from the equation. I believe that the less emotion involved with money, the more money that you will have and the better off with money you will be. I'm going to repeat that for those in the back, for those that wasn't listening, for those that didn't hear me. Okay. The reason you don't want to manually save and invest your money is because that's very emotional. That's an emotional action when you manually do it. Okay. When you manually save and invest your money, it's emotional. You're leaving it up to different emotional factors, to different emotional things that goes on in your life to decide if you're going to save or invest that week or that month. For example, if somebody has a birthday coming up and you need to save for, for something important, right? Instead of saving for that something important, okay, you take that money that you were going to save and buy that person that gift. Now, there's nothing wrong with that. right? Except because you made it an emotional decision and you didn't calculate that into your budget, and then you didn't automate it. Now you prevent yourself from reaching your goals faster, simply because you didn't automate it, simply because you made an emotional action with your money and did it manually, versus scheduling an automatic transfer to where it saves automatically. That way you don't even see the money and it's saved for you. Okay? So when situations that happen in our lives pop up, we tend to hold off on the things that are important, that are really important to us, or that we want to happen, especially when it comes to our financial goals, to put it towards those other things. Okay? So for me, what's non-negotiable is my investments, right? I'm going to invest every month no matter what, right? I'm going to put money into my investments no matter what happens. Okay? And I'm not in control of that. If I was, then I wouldn't reach my goals. It's automatically done. So the more that you automate your saving and investing, the more that you create an automatic transfer from one account to another one that happens automatically without you having to manually do it, the faster that you will reach your goals, okay? And the more often you will reach your goals. All right? Do y'all understand? Do y'all get that? Because the less emotion involved with money, the more you will have and the better off you will be with your money. The less emotions involved with money, the more you will have and the better off you will be with money. You have to automate it as much as possible, because manually doing it is not getting it for a lot of people. Manually handling your money, saving and investing, is not going to do it. 13, stop contributing to your Roth IRA. This is a big one. Go ahead and screenshot. I'm going to give y'all 5 seconds. 5, 4, 3, 2, 1. Vince, were you in Ross? I don't know. I don't know what that is. Miss Banana Split, you're welcome. Got no money to be emotional with. Me either, because it's all automated. All my money tied up in investments. All my money is invested. It's automatically done for me. I don't manually do it. And people don't understand why I don't like spending. It's something that you like spending on, right? I have a spending problem when it comes to like my business, when it comes to education, right? When it comes to getting faster results and, having other people do something that I'm better at, I'll pay for that any day. For saving my time, I'll pay for that any day. All right, so let's get to 13. Stop contributing to your Roth IRA. So this is important. This goes back to number 12, right? When you let your emotions get involved, all right, and you stop contributing to your Roth IRA, that's no good, right? Who here desires to retire with a bunch of money? Who here desires to retire with a bunch of money? Never loan money to loved ones. Exactly. We went over that earlier. Who here desires to retire with a bunch of money? Okay? If you desire to retire with a bunch of money, you cannot stop contributing to your Roth IRA or to your 401k, to your investments, right? You cannot stop contributing to your Roth IRA. You have to, I don't care if it's $100 a month, right? I don't care if it's $50 a month. You got to keep contributing to it. You got to let compound interest do its thing. When you stop compound interest from working, right, and you stop contributing money and you stop dollar cost averaging, like all those gains that you see, all the hypotheticals and the numbers that I show y'all through my videos don't matter. It won't add up, because if you stop for any given reason, it's gonna throw all the numbers off, right? It's crazy how 1 year can go from having like 250,000 to the next year having $500,000, like to the next year it actually doubling just from taking 1 year off. It's crazy. It's crazy how the numbers work, but you have to keep contributing. If you want to retire with dignity, you want to retire with a substantial amount of money, then you can't let emotions get involved. You got to continue to contribute to your Roth IRA. And I always recommend that you max it out. If you can max it out, you are great. If you only max out your Roth IRA, you'll be better off than 99% of people. So by maxing out, I mean $500 per month. So if you can find a way to max out your Roth IRA, $500 every single month or $6,000 per year, okay, you will be good. Okay, if you do that for 30 plus years, you will be good. Okay, but you have to invest for the long term, and you have to continue to contribute to your Roth IRA. Does it have to be a Roth IRA? No. Okay, but I highly recommend a Roth IRA because it allows your money to grow tax-free. Okay, because the money that you put into it is already taxed. It's called after-tax dollars. The Roth IRA allows your money to grow tax-free. So any dollar amount that it grows to after 59 and a half or however long you decide to invest, right? You can take it all out completely tax-free. There's no taxes because it's already taxed going in. So that's the benefit of the Roth. That's why I always talk about the Roth IRA. The requirements are that you can't make over $140,000 per year, and you can't contribute more than $6,000 per year, right? But if you do the math, or if you do a calculator, an investment calculator, $500 per month for 30 plus years, 40 years, can turn into over about 2.5 million, 3 million. All right. Dave Ramsey, I mean, he's cool. He's been doing it for a long time. Do I agree with everything that he talks about? No. But I mean, it's Dave Ramsey. I don't really got much to say. I really don't agree with, I don't agree with half of the stuff that he talks about, to be honest. When it comes to investing, when it comes to debt and credit cards and stuff like that, it's like, it don't work now. It's old school. You got to adapt. And maybe it works for his audience. Maybe it works, but you know, it is what it is. All right, so let's get to the next one, y'all. Let's go through life without life insurance. All right, so this is a big one, y'all. This is a big one. Life insurance is big, okay? And I talk about life insurance not a lot, but I talk about it often. I took his course, and yeah, let's say I stayed poor for a while. That's crazy. That's crazy. Wow. But what was I talking about? Life insurance. Go through life without life insurance. You shouldn't do this. All right. Here's why. I believe in term life insurance, but I also believe in getting life insurance that's best for you. Right. Some people like permanent life insurance. I like term life insurance because it's usually affordable. Right. But if you got to do what's best for you. You got to do what's best for your family. What's best for your situation, because term life may not be right for you. Right. But in most cases, term life is right for most people. But as far as life insurance, let's talk about that. You should have at least 10 times your income in life insurance to be what's quote unquote like properly insured, like properly protected. Okay, you should have 10 times your income in life insurance. So if you make $50,000, you should have $500,000 in life insurance. Okay, at least $500,000 in life insurance. Here's why life insurance is so important though, and here's why I believe you should not ever go through life without life insurance, okay? Because as we're going through life, right, a lot of us right now, what we're doing is we're trying to build wealth. Am I correct? How many of us are in the process of building wealth? How many of us are in the process of investing and trying to leave a legacy behind for our kids, for the next generation? How many of us are in the process of doing that? Okay, so while we're in the process, I see a lot of people saying yes. While we're in the process of doing that, let's say our goal is to get to 1 million. Okay. Life insurance is going to help you along the way. And here's how. So if your goal is to get to 1 million, you don't have that yet. So what you do is you go and get in $1 million life insurance policy so that just in case anything was to happen while you're trying to build wealth or while you're building wealth over your lifetime, if anything was to happen to you, okay, your family still gets $1 million. So just that alone, just think about how powerful that is. Just alone. Just think about how peaceful, how much peace of mind you will have knowing that, okay, I'm building $1 million. I'm focused on trying to get to $1 million for me and my family. But if that doesn't happen, if something was to happen to me before then, my family still gets $1 million. Regardless. Simply because I have life insurance. Simply because I'm insured. That's powerful. I don't know if that's powerful to y'all, but that's powerful to me. That's powerful for me to think about. Okay? If something was to happen, I know that my family's going to be able to get $1 million regardless. Okay? So that does two things. That does two things. Number one, okay, let's say something does happen to you. Your family gets $1 million, but the money that you were building, the money that you were growing, it doesn't stop just because you're no longer here. What your family can do and what you need to teach them and show them how to do while you're here before you're gone or before, if anything was to happen, show them how to take that $1 million and continue to invest that with your current plan, right? With what you're currently doing. That way, because if you didn't have it, and follow me, I hope y'all follow me. If you didn't have the life insurance, what they would have to do is use the money that you're investing. Okay? That's what they would have to do. And you don't want that to happen because if they use that money that you're investing, it's probably going to be taxed and it's probably not going to be $1 million. So they're going to have less money than what they're used to living off of. And they're going to have to use the money that you was building to build wealth. Versus if you had the life insurance, they're able to use the life insurance instead of the money that you were using to build wealth. And then they can continue to build wealth with that money. I hope that makes sense, y'all. I hope that didn't go over your head. Because that's important. Life insurance is going to help you replace your income, right, in case something was to happen to you. So that your family can continue to live the same lifestyle and can continue to invest and build wealth. Okay? So that's the importance of it. Do y'all need me to go over that again? I know y'all want me to move out the way. Everybody want me to move out the way. Y'all don't even care. All right, so let me move out the way. What's up, Zai? Did I see Zai on here? Y'all go ahead and take that screenshot. All right. And then the last one is think money is evil. All right. So growing up, family members used to say that all the time, at least in my family, that money is evil, rich people are evil, they the devil, right? All that type of stuff. Am I alone? Is there anybody else, family, that said the same thing? Is there anybody else? Because it's not true. Or let me say this. Both can be true, right? But it depends on the person. Money is not what makes you evil. The person who you are with money or before money or who you already are, money just reveals more of who you are. Does that make sense? They would say if you're rich, you're selfish. Right. Right. Money just makes you more of who you are. It's an amplifier, exactly. What should I invest in at 18? You should invest in the S&P 500. All right, but it makes you more of who you are. Money is not evil. What you choose to do with it. All right? It's about what you choose to do with it. It's about how you use it. It's about how you use the tool of money. That's what's most important, y'all. That's why that's money. Money is not evil. If you think that it's evil, then you probably evil. You will probably do evil things with money. You associate money as being evil, and that will keep you poor. That will prevent you from going out and pursuing your dreams because you think money is evil, right? That will prevent you from leaving a legacy behind for your family because you think money is evil. So what we have to do is we have to learn more about money. We have to become money conscious, right? And be able to teach the next generation, our kids, the people that surround us, our friends, have those conversations, because money is such a taboo conversation in the household that of course you would think that is evil. We don't even talk about money. Of course you would think that is evil. But the more that we talk about it, the more we get comfortable with it, the more we educate ourselves about it and learn what we can do with it and how we can actually help people with it, right? The less it becomes evil. The more that you will make, the more that you will understand that it's more about the person and not about the money. Okay? So look, y'all, I just went through all 15 of those. It took like an hour and a half, right? But how many of y'all here learned something from this live? How many of us learned something from this live? Double tap if you learned something. Let's get it to 45,000 likes. Double tap if you learned something from this live, y'all, and if this live was valuable. If this live was valuable, make sure you double tap. Okay? If you aren't a part of my group yet, it's called the Money Mindset League. It's a free group. You can join it. There's about 1,700 members inside the group right now. We do a lot of things. We have a save and invest challenge going on. We have a 10K in 100 days challenge going on. We're on day 50. Tomorrow will be day 51, so we halfway through. It's never too late to join. You can always join at any time. We talk every week. Every week we have a weekly discussion. We talk about different topics and everything inside of our group. So if you want to be a part of our group, all you have to do is go to the link in my bio and tap on join our community. Teach about term life insurance. Yeah, if you want to learn more about life insurance, follow me and join our group, and then I'll probably do a live. I'll probably do a live on it. I'll probably do a live. I like doing the lives. Is it a text group? Nah, it's a Discord. So it's like an online community. So it's everybody. It's kind of like, I don't know how to explain it. It's a communication platform where I can talk to everybody at once, right? If you have questions, you can ask me a question. You can tag me, and I can answer that question inside the group. People ask me questions all the time, about different topics all throughout the day. But it's a great community. We're in there learning. We're in there having these discussions every single week. We saving and investing money. It's a good community. It's a safe place to talk about money. So nobody's in there judging or nothing. We're all in there to learn, and we all in there to help each other. So it's like I said, it's a great community. I couldn't ask for a better community if I say so myself. So you can join by going to the link in my bio. So if you tap my profile picture up here, and then I believe if you tap it again, that'll take you to my profile. You can tap the link and then tap on join our community. I believe it's the second button on that page. The link and then tap on join our community. I believe it's the second button on that page. So if y'all want to take a screenshot, go ahead and take a screenshot. But make sure you join. Make sure you follow me on Instagram. Help me get to 10,000 followers on Instagram, and subscribe to my YouTube. Did y'all hear my neck crack? Wow. Help subscribe to my YouTube. Just stay connected, y'all. TikTok is great for outreach. TikTok is great for, growth. but Instagram and YouTube is where, you know, you'll be able to see everything that I post, because I don't think everybody sees everything that I put out on TikTok all the time. So make sure you connect me on those other platforms, and especially inside inside the group, our community, the Money Mindset League. Okay, so what I'll do, I'll spend the next 10 minutes answering questions. If y'all have any questions, drop them below. I'm gonna try to answer as many as I can, as quickly as I can. And but before y'all do that, let me know if y'all want me to save this and put this on YouTube. Let me know if you want me to save this and put this on YouTube. All right, cool. So everybody that said yes, make sure you subscribe to my YouTube. I'm gonna put it on YouTube. Okay. I still gotta put the other one up there. The other one was a good one, y'all. I still gotta put that one up there. And for those that was on the last live, I was able to recover it. So because I didn't know how to end the live, but I was able to recover it. I was able to get that live, so I'm gonna be able to put that on YouTube as well. So make sure you subscribe to my YouTube and go to my Instagram and follow me on Instagram. I'm gonna ask y'all questions about the best times to post for YouTube. And yeah, so let me answer some questions. Can't pay my bills. What are my options besides bankruptcies? So, I mean, that's tough. You really gonna have to dig deep and figure out, you know, what you really want, right? What are your options? Do you have, you know, friends or family that you can stay with? Do you have anywhere that anybody that can help, right? That will listen to your situation and be able to help you for a few months or so, right? Obviously, you know, you won't be mooching off of them or living for free or anything like that. You'll be able to, you know, help them out in some kind of way, maybe pay a bill or something like that. But, you know, in life, it's always good to have people that you can, you know, fall back on in times of desperate need. Or I'm not going to say desperate need, but times when you need to just get back on your feet a little bit, when you need like a couple months just to, you know, save up, you know, I always like to say have $2,000 in your savings as an immediate fund, as a buffer, so that, you know, you're not living check to check, right? If you have somebody like that to help you kind of get back on your feet, to not go into bankruptcy, so that you can get things back on track and back in order a little bit, that'll probably be the best thing for you to do. That's probably the quickest fix in my mind. What can I do if I can't get a credit card due to credit bureau? So I'm assuming you can't get approved. You mean you can't get approved for the card? What you should do, maybe if you don't have good credit or you don't have a credit profile, what you could do is get a secured card. I highly recommend the Discover It secured card, or if there's a credit union near you, I would go to the credit union, build a relationship with them, and open up a secured card with them. They're usually like more lenient and, you know, are more willing to work with people. So I would try that route if you can't get like one of the major cards out there. Discover has high interest rates. So all credit cards have high interest rates. All right, like very high. The average is about 16% for most, 17%. But it doesn't matter what the interest is if you're doing the method that I teach, which is the swipe stripes method, where you only pay for your everyday expenses on the credit card and you pay it off, or at least down to, you know, less than 3% every single month of your total credit limit. Okay, you really want your credit profile to report like 10% or less credit utilization. So if you're able to do that, and you know, if you're able to pay it off, and I teach pay it off every month, if you do that, you don't have to worry about the interest. How do you use trade lines to our advantage for a personal credit score for an 850 score? So if you want to use trade lines, so I'm assuming that you want to you want to borrow somebody else's trade line to be able to boost your score, if that's what you mean, then that's a temporary fix. So most lenders are not going to take that seriously. I'm gonna just tell you that right now. So I mean, you could take advantage of it, for right now, just to boost your score temporarily. But more than likely, after you get off of that trade line, after you stop using that person's trade line or stop, becoming an authorized user on their profile,